Yo! What's good, everyone? My name's Patrick, and today I'm going to be reviewing and going over my $290,000 stock portfolio. So, a bit of background about me. I'm based in the Bay Area. I've been in the tech industry for the last 7, going on 8 years. Um, I'm a first generation Asian American, and I grew up with a single mom. Really, not many people in my family have a finance background, and basically everything I learned when it comes to personal finance, investing, managing money is basically self-taught. Right, I don't have a degree in finance or anything. So in total, I've got about $290,000 in total assets, not including my 2 cars. I have a 2019 Type R and a 2011 Range Rover. I don't include that in my net worth calculation because to me, cars are liabilities, not assets. So starting off with my first portfolio, this portfolio in Merrill Edge is a combination of my Roth IRA, traditional IRA, and just a regular taxable brokerage account. And so, as you can see here, I've got about $173,000 in total in this account. Um, the unrealized gain slash loss is 52 grand, which is pretty neat considering I started investing heavily maybe 2018, 19. I bought my first stock in 2017, but I didn't start consistently investing until 2018, 19-ish. And it really picked up 2020. That's sort of when I really was an active participator, one might say. So here's some stats. Short-term gain, 4.2 grand. Long-term gain, 51,000. Long-term loss, 3 grand. So not bad. And the percentages is really where this portfolio comes to life, man. I mean, I've got 66% appreciation on Vanguard Growth, total stock market index, high yield, and also the VGT, which is Vanguard's ETF for tech companies, basically. We've got S&P 500. We've got dividend ETFs. And my philosophy with investing has really just been to set it and forget it. I try to automate where I can, and I try not to be too active of an investor. I used to participate in options, but it's just too stressful waking up early in the morning and having to really pay attention. And so these days I'm pretty passive. Everything's mostly automated. I'm just trying to live a good life and chill out, basically. And so, yeah, as you can see, the value breakdowns pretty healthy overall. We've got good diversity, it seems like. Mostly ETFs, but I do have some individual stock tickers like Google, Tesla, Visa, MasterCard, Microsoft. And these aren't heavy positions. The majority of my portfolio are ETFs because I just feel more comfortable with that setup. My next portfolio is a former employer pre-tax 401k. And so I've got about $93,000 in this 401k. We've got some pretty healthy appreciation. So year to date, 18%, which is pretty nice. It's been a while since I've seen this, actually. Yeah, this one I don't really check too often. This is like just a set it and forget it kind of thing. It's a target date fund for my retirement age, so I don't look at that all too often. Next up, we've got Coinbase. So I have a little bit of crypto. I don't dabble too much. As you can see, I've just got 3 grand of crypto in here. Nothing too spectacular, really. I mean, I don't visit this all too often. So unrealized return on Bitcoin, we've got 100% return, so about 1.3k gain. Ethereum, we've got 19% return, $138, and then the rest are the losers here. And the rest of my money, so right around 15k, is just in a regular checking account. That 15k is really just there for emergencies, peace of mind, that sort of thing. Some of the key takeaways, some of the things that I've learned. For one, I think consistency is key. I started investing, again, heavily in 2019, and um, I think, that Warren Buffett quote really sticks out to me here, which is be fearful when others are greedy and be greedy when others are fearful. And I've tried to really follow that approach as far as my investing goes. Like during the COVID downturn, I was just scooping up stocks at a discount. And, for all the historic bull runs in this market, I haven't really sold. I've just continued to add to my positions and stay steady. Never get too high, never get too low. And some of the mistakes to avoid, I'd say, is chasing hype. I've definitely been a victim of this, trading options and trying to make a quick buck. Options can work if you're smart with your stop losses and you know what you're doing, but ultimately, the emotional roller coaster for me is too high and too low, and I like to stay even keeled. It's pretty difficult for me to go through that turbulence day to day. I'd say another thing that I've learned is to just be patient, zoom out, stay steady in your positions, keep climbing. Don't rush. Don't try to make a quick buck. Nothing happens overnight. Take it a day at a time, brick by brick. And then lastly, I think one of the most important lessons that I've learned is to just live a little bit, right? I mean, it's so easy to live in a spreadsheet and optimize and maximize your gains, but ultimately, I think at the end of the day, we're human beings. I mean, life is meant to be lived, and you shouldn't be living your life in a spreadsheet and looking at a number on a screen. Like, that's pretty sad. So ultimately, I'd say, if you're into iced latte coffee or like matcha or, shoes, sneakers, cars like I am, I think ultimately, if you're in a position to have some hobbies that you can afford, and you're able to splurge on, then why not, right? Like, it's a way to reward yourself. And if you truly are doing it for the love of the game, for your hobby, for yourself, then actually, like, you spending money on your hobbies will reward you tenfold, right? Because say, for example, you're into cars, and so now you get to drive your dream car. You drive every day, and so every day you're in a better mood, and so you're in a better mood. You perform better at work. You perform better day to day. You're more pleasant to be around. Your mental headspace is much better, and so I think, ultimately, guys, we shouldn't be, in my opinion, ultimately, life isn't meant to be constricted and just depriving yourself of all joy, right? I mean, I've had 10 cars in like 10 years. That's not financially optimal, but ultimately I've lost around 26 grand over the last 10 years in cars. And yeah, like, while I could have invested 26 grand into the stock market over those 10 years, guys, that's like a couple $1,000s a year for my enjoyment, for my memories. And, I've learned a lot along the way, right? I've learned a lot along the way. I've learned how to work on my cars. I've learned how to be part of different communities and different car cultures. And so ultimately, yeah, man, live your life. And so I'm going to try to do these on a regular basis, every few months or so. And so, yeah, stick to it.